Welcome to Eye on Crypto, where we delve into the crypto flow and share the insights you need to know.
BlackRock's recent news that they are filing for a Bitcoin ETF has gotten a lot of attention, and for good reason. In this video, we examine the history, crunch the numbers, and show you exactly what that could mean for Bitcoin, and the results are going to shock you. We'd really appreciate it if you could take a quick moment to brighten up our day with a gentle tap on that like button. It lets us know that we're on the right track, and it helps spread the word to others who might benefit from the info in this video too. An ETF, exchange-traded fund, is a diversified collection of assets similar to a mutual fund, though a key difference is that an ETF trades on an exchange throughout the day like a stock. Being relatively low-cost, tax-efficient, and generally easy to buy and sell, ETFs have become a popular choice for many investors. ETFs are great for stock market beginners and experts alike. They're relatively inexpensive, available through robo-advisors as well as traditional brokerages, and tend to be less risky than investing individual stocks. Approximately only 10% of all the Bitcoin currently in circulation is sitting on exchanges. That is around $50 billion worth of BTC. BlackRock manages about $10 trillion in assets. If just 0.5% of BlackRock money were to move into crypto, every single Bitcoin on the exchanges would be bought up. Think about that for a moment. If the Bitcoin ETF is approved, it would only take a tiny fraction of BlackRock's investments to completely buy up all of the Bitcoin currently on exchanges. Imagine what that would do to the price of Bitcoin. BlackRock already has an almost flawless success rate in getting ETFs approved by the SEC. Out of 576 ETF proposals submitted to the SEC, only one has ever failed. So BlackRock know exactly what is required to get an ETF approved and are unlikely to go through the time and expense of filing for a new ETF unless they believe it has a high chance of getting approved. Fidelity is also rumored to file for a spot Bitcoin ETF and rumored to buy out Grayscale. Fidelity Assets Management Company, or simply Fidelity, is one of the largest and most well-known investment management firms in the world. Founded in 1946, Fidelity has grown to become a leading provider of investment management, retirement planning, brokerage services, and other financial products and services. Fidelity has a global presence, serving customers in various countries around the world. They operate in North America, Europe, Asia, and Australia, and have offices and customer service centers in multiple locations. Fidelity was also the first major investment firm to endorse Bitcoin. In 2014, Fidelity began mining Bitcoin. By 2018, Fidelity launched their first crypto service, Fidelity Digital Assets. The first gold ETF launched was Gold Bullion Securities, which listed the 28th of March 2003 on the Australian Securities Exchange by ETF Securities and its major shareholder, Tuckwell. The SPDR Gold Trust ETF launched in November 2004. This is what happened to the price of gold shortly after the ETF was launched. While the price of gold was still below $450 per ounce in November 2004, gold saw a parabolic rise in the years that followed. In September 2011, less than 7 years after the launch, gold was trading at $1,920 per ounce. Many economic factors have influenced the price of gold, but the launch of ETFs certainly played an influential role in attracting global institutional funds to the market. Bitcoin is often referred to as digital gold due to several reasons. Limited supply. Just like gold, Bitcoin has a limited supply. There will only ever be 21 million Bitcoins in existence, making it a scarce asset. This limited supply creates a sense of value and scarcity, similar to gold. Store of value. Gold has been historically used as a store of value and a hedge against inflation. Similarly, many investors and enthusiasts view Bitcoin as a digital store of value. Its decentralized nature and scarcity make it appealing as a long-term investment and a hedge against traditional financial risks. Portability and divisibility. Bitcoin's digital nature allows it to be easily transported and divided into smaller units. Similarly, gold can be melted down and divided into smaller pieces. This divisibility and portability make both Bitcoin and gold highly fungible and usable as a medium of exchange. Security. Gold is considered a secure investment due to its physical properties and long history as a valuable asset. Bitcoin, on the other hand, offers a different kind of security through cryptography and decentralized blockchain technology. The use of encryption and decentralized networks makes Bitcoin resistant to hacking and fraud, adding to its reputation as a secure digital asset. Volatility. While gold is known for its stability compared to fiat currencies, it can still experience price fluctuations. Similarly, Bitcoin has gained a reputation for its price volatility. This volatility can be seen as both a positive and negative aspect, as it presents opportunities for profit, but also risks. The comparison to gold highlights Bitcoin's potential as a valuable and volatile asset. It's important to note that the term digital gold is a metaphorical comparison. While Bitcoin shares some characteristics with gold, it also has unique properties that differentiate it from traditional precious metals. So what effect could a Bitcoin ETF have on the price of BTC? An ETF, Exchange Traded Fund, is a type of investment fund that is traded on stock exchanges, similar to individual stocks. It is designed to track the performance of a specific index, commodity, sector, or asset class. ETFs provide investors with an opportunity to gain exposure to a diversified portfolio of assets without having to buy each individual security separately. The introduction of a Bitcoin ETF could have several benefits for Bitcoin and potentially impact its price in the following ways. Increased accessibility. A Bitcoin ETF would make it easier for traditional investors to gain exposure to Bitcoin without the need to directly hold or manage the cryptocurrency themselves. This increased accessibility could attract a larger pool of investors who prefer the familiarity and convenience of investing through regulated financial institutions. Institutional adoption. Many institutional investors, such as pension funds, endowments, and asset managers, have strict investment policies that limit their ability to directly invest in cryptocurrencies. However, if a Bitcoin ETF is approved by regulatory authorities, it could pave the way for greater institutional adoption. This influx of institutional capital into Bitcoin could potentially drive up demand and positively impact the price. Enhanced liquidity. ETFs trade on stock exchanges, which are highly liquid markets. By introducing a Bitcoin ETF, it could bring additional liquidity to the Bitcoin market. This increased liquidity would make it easier for investors to buy and sell Bitcoin, potentially reducing transaction costs and price slippage. Mainstream recognition. The approval of a Bitcoin ETF by regulatory authorities would signify a level of acceptance and recognition of Bitcoin as a legitimate investment asset. This mainstream recognition could help alleviate concerns about regulatory uncertainty and enhance the overall perception and reputation of Bitcoin. As a result, more investors, including retail investors, might be inclined to invest in Bitcoin, potentially driving up demand and impacting the price. It's important to note that the impact of a Bitcoin ETF on the price of BTC is speculative and dependent on various factors, including market sentiment, regulatory developments, and investor behavior. A Bitcoin ETF could potentially have even greater positive effects on Bitcoin's price than it did with gold. As well as the mainstream recognition Bitcoin would receive, the market sentiment of existing Bitcoin holders and buyers would likely create a parabolic rise for the price of Bitcoin. We are already seeing a lot of interest and hype around the possible Bitcoin ETF. If approved, imagine what the price chart could look like. ETF approval now could be the trigger for exponential rise in price leading up to the next Bitcoin halving, seeing Bitcoin absolutely smash through previous all-time highs. None of this is financial advice. What are your thoughts on this? How high do you see Bitcoin going? Don't forget to hit that like button if you got value from this video. Subscribe to keep your eye on crypto, and we will see you on the next one.